Hi everyone, welcome back to ASX Market Watch and charting signals around the world on your world indices, just checking out where the world is heading from a chartist point of view. Because we believe that 3 out of 4 stocks might follow the overall index, then it pays to listen and pays to watch where the index is heading, because then you might discover which way 3 out of 4 stocks in that index are heading as well. Guys, we're just going to jump straight into it. You know, we look at the entire world, we look at every major index around the world, and this week we're going to start with the Nikkei. There's not a lot going on around the rest of the world, and I'm going to show you why, but in the Nikkei, it's just been absolutely spot on. Over the last couple of weeks, obviously we've nailed it completely. We called a short-term exit signal about 3 days before the crash. That was happy days there. Then we called a short-term entry signal at the bottom here based on this single bar entry. Check out the previous ASX Market Watches or the previous charting on world indices to see that. Obviously, that was just spot on. It was definitely not a hindsight trade. Last week we called another short-term exit signal based on this, and that was our short-term exit signal there. And 3 days after that, they announced that the Nikkei, or that Japan has now entered its next recession. So basically, the chart does tell the story, and the chart does tell the story usually before the rest of the world will tell you the story. So obviously, the news is not always a good thing to watch, but the chart is definitely a good thing to watch, guys. Absolutely fantastic stuff. Okay, where to from here? We're still in a short-term downtrend, guys, and if we can get back above the 10,000 level, then that would give us that would basically give us a new uptrend. But yeah, it just depends on if we can get above that level. Until then, on a short-term basis, we're still in a downtrend on the Nikkei in Japan. So next, let's have a quick look at the All Ordinaries. Now, the All Ordinaries is an interesting one simply because over the last couple of years, really 2 years now, we haven't been able to get above the 5,000 level, and that still remains true to this day. We called ourselves a short-term exit signal right about here, and since then the market has continued down. We also said that we'd find support at the 4,700 level. Yes, so obviously the market has found support just before then, which is absolutely fantastic. And again, check out the previous ASX Market Watches just to see that we absolutely called that well before it happened. What we're still in at the moment, guys, is we're still in a short-term downtrend, okay? At least according to the charts. We've still got lower peaks, lower troughs, and we'd need to get above this uptrend line. Basically, what we're looking for the next little signal would be above 4,900. That would be for the markets to return to bullish or to neutral territory. Until then, it's really a tough one because on the All Ordinaries, we are just in this huge sideways movement. There we go. And it goes from about 5,000 to about 4,500. So it's about a 500 point move. And at the moment, we've still got our support at 4,700, and we've still got our resistance at 5,000 right up here. So until then, guys, it still remains in a sideways movement on a medium-term basis and a downwards movement on a short-term basis. Again, not rocket science. They're very, very simple stuff. The Dow Jones, a lot of people are starting to call, people have been very scared about the Dow Jones or about America for quite a long time based on the fundamentals. The fundamentals have been painting a pretty scary story. However, in the meantime, the chart has given this... It's literally given a 20 to 25% move, which is just awesome. And there are so many gains to be made when the overall market makes a move like that, because there will be individual stocks that will be making bigger moves than that. If you know which sectors to look in, obviously you want to be choosing the strongest sectors if you can possibly help it, just to tip the odds further in your favor. But yeah, at the moment on the Dow Jones, we're almost in a short-term downtrend, but not quite. We had a little zigzag pattern down here, but with a higher close, so that means that there are still buyers around this level, and there will be buyers around this level because this is the 12,400 level on the Dow Jones. This is where the market found resistance a couple of times, about 3 or 4 times, and once it's crossed it, it will tend to become support. So really what we're finding now is this is kind of the moment of truth for the Dow Jones, and what we're seeing based on that is that if the market can keep its support around 12,400, then yes, that's fine. And if it can't, then we might expect like a short-term exit signal and also further falls from there, based on the charts and based on that particular pattern. So yeah, that's the Dow Jones. Really, really simple stuff. The next one is the FTSE. Just over the last couple of days, guys, have had some very long tails on the FTSE. That means that sellers have come back in at this level. We haven't really had any proper zigzags down, and actually, to be quite honest, we've got long tails to the upside as well, which means that there are buyers around this level too. So again, the FTSE is very similar to the All Ordinaries in that we've just got this range. This absolute range, and yeah, it's just a sideways movement, except only about 6 months on the FTSE, whereas it's gone for about 2 years on the All Ordinaries. And yeah, so what we're looking for, the market would really have to close above 6,100 to be bullish again on the FTSE. Until then, we're sort of really, it's not really going anywhere. There's support at 5,800 based on the trend line. But yeah, really, it's just a matter of wait and see. And again, if you wanted to, like some people would, sell the resistance and buy the support in this sort of situation based on this channel, like it's kind of a channel trading. Some people would prefer to do it that way, and you can do it using options as well by writing puts and calls above and beyond the resistance levels. But again, that's just a different story altogether. Guys, the Hang Seng really quickly. Actually, no. Oh yeah, no, the Hang Seng. Obviously, we said that we'd find support at 22,800, and that's exactly what's happened. Again, this stuff is not rocket science, guys. It's so ridiculously easy. I mean, look at it. It went exactly on that line, exactly where we said it would, which is quite a phenomenal thing. The charts and people, they have a certain amount of predictability to them, not a lot, and sometimes all you can do is follow the trend, but at the same time, sometimes yeah, you can definitely predict it with a good amount of solidness. It's pretty cool stuff anyway. But yeah, so over the last couple of weeks over the Hang Seng, yeah, we didn't quite have an entry signal. We had a trend change, which was good, but didn't quite follow through. Again, that's basically exactly what we said. And now we've got, well, I mean, even if you look at it from an Elliott wave point of view, 1, 2, 3, we could be getting our little sideways movement now. And yeah, it's tough to see if we'll see that fifth wave down. It's definitely a possibility, but the market would have to go back above the 24,000 level to become bullish again. And yeah, we'd sort of have to be supported by higher peaks and higher troughs, which we definitely have not had at the moment. Even though the market is being supported, we haven't had any higher peaks and higher troughs over the last sort of 2 to 3 months. And so, yeah, really you would count the Hang Seng in a short-term downtrend based on that. So next is the Shanghai Composite in China. It always pays to see where China's going, and yeah, really simply, we also said that the market would find support around this trend line level, and that's exactly what's happened again. So the market has found support at the trend line level, 2,880 approximately, 2,820, around that level there. Guys, what we're looking at, this is, again, it's still in that moment of truth. Last week we said it would be a moment of truth for the Shanghai Composite, because if the support holds around this level, and as you can see, we've got a few long-tailed bars here which indicate buyers coming back in around this level, which is understandable given that support there from the trend line. Yeah, I hope that makes sense. So again, it's not too hard to grasp. It's fairly uncomplicated. But yeah, it's got the support there. If it breaks down through that support, expect further falls, obviously. And yeah, we're still in a short-term exit signal or a short-term downtrend on the Shanghai Composite at the moment, but it's just this little level of support where the market is holding at the moment, which we would expect that it would. And again, for the market to return to bullish territory, we'd really expect at least higher peaks and higher troughs on a shorter term basis, and on a longer term basis, a close above 3,100, above that medium term trend line there. So that would be your next sort of stronger level of resistance based on the last 2.5 years on the Shanghai Composite in China. And what have we got last is the Bombay Index. Really quickly, guys, the Bombay is one of the ones that has started to break down. As you can see, over the last week, over the last single week, we had a similar scenario to the Shanghai Composite. It was finding support at that trend line, except the Bombay Index did break down, whereas China hasn't broken down as yet. So yes, it has broken down, and basically, yeah, still in the short term downtrend, and yeah, really, that's all there is to it. It's still in that short-term downtrend. If and I mean, really, on a medium-term basis, that's our sort of medium-term trend line there. And yeah, the market has sort of closed below it. It has not been able to close above the other medium-term trend line, so it's definitely not in a medium-term uptrend. Really, on the Bombay Index, you'd call it as a short-term downtrend and a medium-term downtrend as well. For it to return to bullish territory, it'd be 19,800. That'd be a close above that, and that would just be your previous peak and the trend line there. That would give us a solid signal that the market had returned to bullish territory. But until then, yeah, short-term downtrend, medium-term downtrend. I do believe on the Bombay Stock Exchange, based on those very, 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 very simple tools. And that, I think, that is the world from a chartist's point of view. Yeah, again, not a lot going on, but guys, hopefully, you know what, when the market breaks out, we will be there. And we were there I think the last great move we had was August 2010. As you can see, it started a 20% move on the Dow Jones, so heck yes, that's the sort of stuff that you want. But we'll definitely be there when the next move happens, guys, so be very, very watchful. You know, keep an eye on us, drop by from time to time, come and say g'day. But basically, when it's there, we'll tell you. Until next week, guys, happy trending, have a fantastic week, and I will see you then. Bye for now.